Hello, welcome to the European Open briefing for Tuesday, April the 17th. I'm Rafi Barjan, currency analyst at XM.com, and we're going to be taking a look at the latest developments in the currency markets today. The US dollar is moving lower this morning as we're seeing those trade war concerns resurfacing somewhat, just as tensions over Syria have started to subside. The pound is one of the best performance this morning. It hit a fresh post-Brexit high ahead of key UK data later today. The euro is also looking fairly bullish, but the Australian dollar is mixed. It actually fell after the release of the RBA's meeting minutes before bouncing back again. And the Canadian dollar has jumped higher on the announcement of a new pipeline construction, which would boost Canadian oil output. So let's take a quick look at the major pairs now. We can see the dollar index, which measures the greenback against the basket of six major currencies, is trading near fresh lows. Dollar yen has slipped below the 107 level. Pound and euro both up, and so are the Aussie and the loonie, but the Kiwi is the exception. It's down by 0.2% against the greenback. Gold prices are lower this morning, but oil is slightly up, recovering some of the previous day's losses. If you look at the major indices now, we can see positive earnings results helped Wall Street close higher yesterday, boosting shares in Asia and in Europe. Chinese stocks, though, are the exception. So is Hong Kong. They closed lower this morning, and the FTSE is also not getting much of a boost from Wall Street overnight. It's flat at the moment, in contrast to German and French indices, both moving higher. Moving now on to the US dollar, we can see dollar yen in orange here in the chart, slipping away from those highs on Friday when it came close to 108 level. It's now slipped below the 107 level. The dollar index is at a 3-week low. So this morning we are seeing some renewed concerns about a trade war once again. This comes after the US banned American companies from selling components to Chinese telecom producer ZTE, which has been accused of illegally exporting its products to Iran and North Korea, which would be in breach of sanctions on those countries. So the Trump is for 7 years. So given that ZTE is reliant on US components, that could be quite damaging to that company, and possibly other Chinese companies could also be come under fire over the coming days. We also had, I think this was last week, the US Treasury Department releasing its latest semi-annual currency report. Although the report didn't mention any country as a currency manipulator, Trump nevertheless in a tweet has accused China and Russia of currency devaluation, once again raising tensions over trade and the exchange rate as well. And all of this comes ahead of a summit between the US and Japan starting today and tomorrow. So that's basically, that's also could be another potential upset for the markets, given that the US will likely push for a bilateral trade deal between Japan and the US, but Japan is not in favor of this. Japan wants the US to join the TPP. Also, the US Treasury Department kept Japan on its currency manipulation watch list, along with China. So again, that could be a major point of disagreement between the US and the Japanese leaders. And also, this has raised again the fact that the Trump administration likely is in favor of a weaker dollar, even though officially it denies this. So that is also weighing on the greenback this morning. This week is going to be a fairly busy one for Fed speakers. A whole bunch of them will be giving speeches. We already heard yesterday from New York Fed President William Dudley saying that we could potentially see 4 rate hikes this year. So that would be reasonable. But he did suggest suggests that more than 4 is unlikely, as that would no longer be considered as a gradual. Neil Kashkar, Minneapolis Fed president, was a bit more dovish. He doesn't see inflation rising sharply higher anytime soon. And Atlanta Fed President Raphael Bostic was also not too concerned about inflation and also about rising wage pressures. He says we haven't quite seen wage pressures just yet. And yesterday we did see a stronger than expected increase in US retail sales. They rebounded strongly in March following 3 consecutive months of declines. So we could potentially see more hawkish remarks by the remaining speakers this week, though we also do still have quite a few doves. So it's unclear whether or not the coming week those speeches will help the greenback overall. But the weaker greenback is definitely helping the euro and the pound. We can see the euro breaking above the 1.24 level for the first time in 3 weeks. We've got the German's due business survey coming up shortly. Sterling has hit a new post-Brexit high, reaching 1.4376 against the US dollar, as we're seeing rising expectations of a Bank of England rate hike next month. So sterling is currently at a 22-month high, ahead of the job figures, which are due at 8:30 GMT. Tomorrow we're going to see the UK inflation numbers for March, and on Thursday we're going to have retail sales numbers. If that data is broadly on the upside, broadly positive, we see some upside surprises there. That could go some way in confirming a rate hike by the Bank of England at its May policy meeting. Let's move on to the Australian dollar now, because we did see the Aussie seesawing against the US dollar. It fell to around just above 0.7755 following the release of the RBA's meeting minutes, which were fairly dovish. In it, the board members agreed that there was not a strong case for a near-term adjustment in monetary policy, reiterating their neutral stance. There was also some comments about the exchange rate, saying that an appreciation of the Australian dollar would be expected to result in a slower pickup in economic activity. Sort of all of that weighed on the Aussie. Earlier, though, we had seen GDP numbers out of China, which actually beat expectations, so that helped the Aussie rebound rather quickly. At the moment, it's recovered to around 0.7790. So Chinese economy grew by 6.8% year on year in the first quarter. Forecasts were for 6.7%. We also saw a stronger than expected increase in retail sales, but we did see industrial output and urban investment disappointing somewhat. But overall, the Chinese data helped risk appetite this morning in Asian trading. The Canadian dollar is also looking fairly bullish at the moment. It's trading close to last week's 70-week high of 1.2541 to the US dollar. Yesterday, we heard the Canadian Prime Minister Justin Trudeau offering to provide financial backup to a key pipeline project, which would create a major expansion of Canada's crude oil capacity. So that given that oil is a major export of Canada, that's obviously very positive for the loonie. And tomorrow, the Bank of Canada will be in focus as it announces its latest policy decision, and we could possibly see a hawkish shift in the Bank of Canada's policy statement, and that would extend the loonie's gains. If you look at today's economic calendar, we can see the Chinese data there coming released early in the day. We've got the UK job numbers and the German ZEW economic sentiment index coming up shortly. We also have the bi-weekly dairy auction that could possibly affect the New Zealand dollar. And in the US session, we're going to have housing data, industrial output, and Canadian manufacturing sales. That's it from me. Thank you very much for watching, and have a great day.